Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
Hello, welcome to Share Shootout. I'm Bruce Whitfield here on CNBC Africa, first with Business Worldwide. So will Howard Webb take over from Alex Ferguson at Manchester United? Did the Guptas really use tandoori chicken to bribe officials at Waterkloof Air Force Base? We have no answers to all of these questions, but we do have a grandiose battle of the stock pickers. I'm Bruce Whitfield, and for the next 30 minutes I'm playing judge, jury and executioner because we're too cheap to hire those three people to do the jobs on what is the most vicious stock picking show on television. This is Super Tuesday on CNBC Africa because since the start of Share Shootout, only 3 stock pickers have recorded 4 wins. And 2 of them are here tonight. Our first stock picker has 5 appearances, 4 wins and 1 loss. His name is Gary Booysens from Vunani Private Clients. His challenger has got an identical record of 5 appearances, 4 wins and a loss. Mike Haworth from Applied Capital Insights. Both of our guests have pre-picked 3 shares. They're keeping those very close to their chests because neither knows what the other holds. And at some point during proceedings, they must accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they really don't like. They've each got 30 seconds to argue their stock pick. We then interrogate their choice. It then gets shot down or accepted. So let's let the Share Shootout begin. But before we do that, the only time you've lost is to Big Bad Gary over here, Mike.
Indeed.
All right, so we make Big Bad Gary go first. I think we should. Because, Gary, I'm intrigued by your first pick. You have got a company with a market cap of less than 140 million rand. It is a pipsqueak in the world of companies listed on the JSE. You've got 30 seconds to explain to me why Torre Industrial isn't a load of a bull.
There's no question, it's a growth company and guys getting in very, very early. Guys calling it a nano cap at the moment. But yeah, it's the old SA French crane business, relisted. Listed end of 2012, so it's very, very new. Already we've seen some institutional interest, so we've seen, I think there's 8 institutional investors already in, so it looks like the smart money's getting in early. And yeah, it's, I mean, the private placement was well taken up, and it looks like a business, the results coming up are not going to be so good, but they've already bought a forklift business out of Cape Town, and that's going to be very earnings accretive, and guys are calling it a baby Invicta. 30 seconds each, but you had to get baby Invicta in there. Is Torre Industrial cream of the crop, or is it a load of bull? Because Torre is kind of bullish, isn't it?
It is, but I think it's embryonic bullish. I mean, it's a very small share. I think it's in the Altex, just come onto the Altex. And yeah, I don't know too much about it. I mean, the forklift business, certainly from watching the likes of Barlow's, etc., has not been a great business. The material handling side of things has traditionally not been a great business. So I'm not quite sure what these guys are going to do that's different, other than, you know, the concept of trying to build an Invicta type of portfolio is an intriguing one. There was a comment that Gary mentioned. I don't know about that.
But you can buy a Barlow World, okay, with its massive diversification and all of that sort of stuff at a couple of $100 a share, or nearly $100 a share or thereabouts at the moment, and you might get yourself a nice 10-15% return a year. Not bad going. But if you want the Pinnacle Technologies type returns on a minuscule part of your portfolio, you need to be going around and fishing in the deep, dark water. And Pinnacle Technologies, remember at the time, 10 years ago, was a 15 million rand company, 25,000% growth over 10 years. Could Torre Industrial be the Pinnacle Technology of 10 years from now? Maybe that's a good question for Gary, actually.
Yeah, you never know. I mean, that's exactly what you're looking for in a company like this. This is not something that you're going to dump a whole portfolio, and you can't really. I mean, some guys can buy that entire company with their pocket change. So it's something that it's a little fun stock to put on the side of your portfolio. But I mean, it is very owner managed as well. So the managers currently have a large chunk. So
is Wern. And a bunch of others, actually. I mean, owner managed is no guarantee of success, as Werner shown us.
No, 100%, but it does put the incentives to grow in the right places, and I think their strategy is very clear. I mean, it is to acquire new companies and almost look at the companies that Hudeco and Invicta have overlooked and give them a chance. I think, you know, in the current climate, like Mike says, it's not easy for the diversified industrials. The market there are tough trading conditions out there, but that's exactly the time where you want to sort of be using cash to bolt on and buy it. So when the construction sector and the mining sector do turn, if they do turn, you're going to get all the growth with your new businesses.
You see, a very convincing sales pitch, but do you fall for it, Mike?
I think he's brought a pea shooter to the gunfight. From an industrial point of view, I think things are really tough at the moment. The productive side of the economy is in quite a lot of trouble. So they're certainly going to be trying to grow the business in extremely tough times. Not convinced.
Okay, you're shooting it down.
Shooting it down.
You're taking the pea shooter, breaking it in half and spitting on the feet of the challenger. So Gary Booysens shot down on his first attempt. Torre Industrial, a creative and courageous pick. 140 million rand company. It is too tiny for Mike Haworth's appetites, and plus that sector is under a huge amount of pressure. Gary point, well, that's why you buy it now, and then you sit in the sidelines and wait to get rich. Let's go for you, Mike, because if you bought some Torre Industrials, you'd be forced to drown your sorrows in something delicious and delightful and something to dull your senses just a little bit. 30 seconds on Distell, please.
It's a South African Diageo. It produces and distributes spirits, wines, flavoured alcoholic beverages, and cider. It's the second largest cider producer in the world. So real growth's coming from cider and these flavoured alcoholic beverages. It's had a compound growth over the last 10 years, total return of 25%. Strong cash flows. It just bought some top-end whiskey producer.
We're going to leave it there. Vunani, I think, is the whiskey producer it has bought, but the second biggest cider manufacturer in the world. Where do you get that choice statistic from?
Well, the South African cider consumption is 5 times bigger than the States, 5 times bigger than Australia, and 10 times bigger than Canada.
Jeez.
And that's where the growth is.
Absolutely.
I think the other interesting thing about Distell is that it's got a massive inventory of which is essentially half of its asset base. And you might remember years gone by, Chris Logan was at them saying, listen, you've got a lot more value in this inventory than you making out. This is a treasure trove which we can't see inside. So I think that there's an interesting little something there on top of the 25% returns per annum for the last 10 years, which would satisfy my meal requirements rather than...
Okay, fair enough. Gary, can you, in any conscience, shoot down Distell?
It's difficult. I mean, it sounds like a good business. Not one that I look at too much, and it's not one that I trade because I would always be going rather with SAB at the moment. So I mean, yes, I would probably go with the beer over the spirits
Okay.
at this time.
But the cider story is interesting because one of the stories around the same time as SAB Miller lost Amstel, of course, they were fighting the cider wars and were forced to bring in Reds to try and compete with Savannah, because Savannah caught SAB with its trousers down. That's one of the reasons why Lion went out of it. We lost Lion Lager because basically drinkers switched from the sweetest beer there was, which was Lion, and switched into Savannah, for example. So, I mean, as a principle, the drinks business is a good place to be. Globally, it's a win. It's a winner.
Yeah, for me, I think I'm actually going to accept it because, yeah, it's nice and defensive in a market that's running like it is now. I think putting something, an alcoholic beverage into your portfolio, it's not a bad play, whether it is Distell or SAB.
Okay, so why not SAB? Why Distell?
Well, I think that Distell is using hunters to fight lion. But,
fair enough.
The performance of the company is great. I think it's complementary to the SABs of this world. It's very much a African story. 28% of its revenues come from exports. Most of those are sub-Saharan.
Okay.
But it's pushing out internationally as your. I didn't understand that pronunciation.
Vunani.
Okay.
It's expensive Scotch whiskey that they bought. There we
Yes.
go. Very expensive Scotch whiskey. And there are enough people in this country with expensive Scotch whiskey tastes. Plus, of course, there's a global market for the stuff as well, which is useful. So, Gary, you're accepting it, not shooting it down, because, yep, you may actually regret that acceptance, because he's got some interesting stocks in on his list. Let's go back to you then, Gary, with stock pick number 2, which is considerably more cautious, if not somewhat courageous from a South African perspective, because there are so many unknowns from a South African perspective when it comes to the healthcare sector. These guys have got operations in Switzerland as well. I'm talking, of course, of MediClinic, and want to know in 30 seconds why you think it's a good pick right now.
MediClinic, I mean, it's pretty much, I mean, like you say, operations Switzerland, South Africa, also UAE. The real growth market is going to be the UAE. I mean, there's the new hospitals supported by a number of clinics, all feeding through. I mean, they're looking at the 30% revenue growth there. So very, very, very attractive. But I think the kick is, I mean, they've just in Switzerland had their debt has at least become tax deductible. So, I mean, the market, the consensus, they're looking for probably about 40% earnings growth from the company. We're putting it at about 49 at the moment, our analysts. So we like it. We think it's, even at this level, it's undervalued, and it's a very good play.
There we go. Do you like it?
100%.
MediClinic, why do you like it?
The growth prospects are there. The fact that they actually have had successful spread into the international markets. I buy the UAE story.
Pick a letter, any letter. UAE, yes.
Being an old UAL employee long time ago. And yeah, it doesn't carry the same kind of debt issues that some of the other.
Well, Netcare has certainly got a great big cesspool of debt, isn't it, relative to MediClinic?
A judgment.
A judgment. Okay. Oh. Okay. So MediClinic, you like it?
I like it. Yeah.
Would you go and spend a night in their hospitals, or would you choose a Netcare hospital?
I'll keep myself going to the Virgin Active gyms. Thank you very much.
Always a difficult and evasive character this evening. So MediClinic, it's a 54 billion rand company. What about the issues around national health insurance? We've seen a softening of the stance of the ANC, which of course wrote lots of policy documents on NHI, which had those come to fruition, the South African private healthcare sector would be dead by now. There has been a softening of the approach and an acceptance that actually you can't operate a healthcare system in South Africa without the private sector. But is that private sector not going to be put under undue pressure in this economy?
Yeah, but I think that is factored into the price anyway. I mean, guys have been panicking about that for a long time. That said, also, I mean, if you look at our private healthcare sector, we are incredibly efficient compared to globally, because globally, if you look at Europe, etc., they, they've had the national healthcare there for a long time, and I mean, that's exactly why MediClinic has done so well moving into Switzerland, because they have the efficiencies to go and operate there. I think it would be a great shame if they were to, face such strict regulatory pressure that they couldn't make money and that their efficiencies couldn't be realized in South Africa, and it would limit the choice for South African consumers whether they're going to have to go to a government hospital or a private hospital. But I think, I think, like you said, I think a lot of that is priced in, and the softening of the stance is probably feeding more into a share price appreciation.
The big thumbs up. You like this one, Mike?
I like it, and I think just another point about the medical aid population in this country is growing now that the black middle class is growing like it is. So that certainly plays into the private hospitals broadly, and certainly into MediClinic.
Ironically, isn't it? The place where job growth is happening mostly is in the public sector. The public sector then provides medical aid for public servants to go to the private hospitals. Takes pressure off the public sector, I suppose, would be the answer to that. There we go. But yes, the big thumbs up for MediClinic this evening. Let's look, Mike Haworth, then, at your second pick. And as much as you want to go to the Virgin Active gyms to keep yourself healthy and out of the hospitals, your stock picks are destined to put people in ICU at some point if they're irresponsible. First was Distell, and now British American Tobacco. You're trying to keep these hospitals busy. 30 seconds as to why you like British American Tobacco.
It's the equivalent of SAB in the tobacco market, second largest in the world. It's got over 200 products. It operates in 180 countries around the world. That product span allows them to actually move into the emerging markets and to be able to follow the emerging markets as the income per capita is growing. So you've got there's a distinct problem with the volume growth because of regulation, etc. in the developed markets. 80% of sales are in the emerging markets.
Okay, this is a $1 trillion company.
Absolutely.
This company is worth as much as South Africa spends every year running itself. It's considerable global company with considerable global reach. Do you like British American Tobacco?
From an investment point of view, I think, you've got to like it. I mean, you look at the analysts, and I think there's 14 buys out on it and no sells. So it's very difficult from an investment point of view to say it's not a good company. The only way that I can shoot it down is probably on a moral ground. I'd have to say. I mean, that
being the picture of health.
Yeah, health and hospitals is what we're investing. I mean, you really want to go in something that kills, I think, 1 in 5 Americans. And
the point is that it helps his hospital pick if you. it helps your hospital pick if you support it.
Yeah, I'm supporting his.
Again, I'm taking the moral high ground here, so I'm not planning on killing people to get them into my hospitals.
But the issue around tobacco is that they're not really growing the volumes of cigarettes because there are huge regulatory pressures, but also there is a huge barrier to entry because in many countries, like South Africa, like Australia, places like that, you can't advertise new brands.
You can't, but you've got, I mean, they're already well established in those markets. So, you know, to actually break into it would be very difficult. I mean, presumably the Dhaka market would be the only real comparison, which would be insignificant by comparison. You're talking about 700, I mean, British American Tobacco produce 700 billion cigarettes a year. This thing is a cash-making machine. It has margins of 38%. Very strong cash flows.
I think I'm going to shoot down Gary's objection on moral grounds because it's lame. Okay, I happen to agree with that particular perspective. But we're talking about investments. We're talking about making money so that you, who doesn't smoke, can retire comfortably in your old age off the back of people with bad habits. So, from an investment perspective, even though British American Tobacco, this trillion-rand company, is sitting under not overly demanding global PE of 20 times, it's not excessive. It's sitting on a dividend yield of 3%. You can't, in any clear investment conscience, shoot it down.
Yeah, if you look at the ratios, they are good. It does look like a good investment. The only thing is longer term. I mean, it is, like you said, it's actually a declining market. If you look at the European revenue growth over the next 3 years, you're probably looking at negative 14% revenue growth in Europe, which is. Even though you are getting emerging market growth, Europe, those sorts of regulations are going to filter through to the emerging market eventually.
In the long term, Keane said, we're all dead. Absolutely. But yeah, so you can't, on investment grounds, shoot it down.
Not short term, but over a 10-year period, is it something that I'll put in my portfolio to buy and hold for the next 20 years? Probably not.
But how many things do you really buy and put in your portfolio for 20 years? On that point, so I've shot down, he's shooting down, he has to accept it.
One other point about it, of course, is that your pricing power is more than strong enough to offset your volume declines.
And what's fabulous about this, and was explained to me wonderfully the other day, in terms of lots of the cost of the packet of cigarettes, called it 70%, is made up of excise duties, taxes, and all of those sorts of things. You push up the price of cigarettes by 5 cents, you get the 5 cents. It's not an additional excise. So the margin that you get on your portion of the cigarette pack price is considerable on that environment. So you're accepting it, basically. I've had to force your hand. Well, okay, we break with tradition from time to time, and as I said, judge, jury, and executioner. Let's go to the break in just a moment. But Gary and Mike are shooting their best shots from the other side of the break in just a moment. But here we've got Mike Haworth, who's got Distell and British American Tobacco, both of which Gary has had to acknowledge are good stock picks. And then Gary Booysens, his adventurous Torre Industrial, a new listing on Altex in December last year, getting shot down by the cautious capitalist, by Mike Haworth. He's shot down Torre Industrial, but he's accepted MediClinic, and then